Okay, great. I founded a company about 20. I was a banker by background. Started a two-person credit card company. And when I say credit card, we're talking about processing today. And we grew it to about 500 people in the U.S. and became one of the larger independent processors at that time. And did a lot with golf, and I'll explain my golf background, working with Jeff Lofstad and the South Florida PGA. And during my tenure in the payment space, I got really involved in the industry. I became the educational author to the whole industry. And I also was on the board of a company called First Data, who you may or may not have heard of, which is and was the largest payments company in the world, doing all the technology for most, probably maybe 15, 20 million merchants. You may not have heard of that company, but I can explain why as we go through the presentation. I did sell that business, and I've started several other payment companies, two of which I have now. One is called Merchant Advocate, and we are not, this is what's interesting, we're not a payments company anymore. What I do with this new business, I do expense auditing, and I share information with merchants. So we have a lot of golf relationships just to help. I want your section to be paying as little as possible. Why should the money go to Visa, MasterCard when it can go to your section and to all the good things that you do? In addition to golf and payments, I've authored 6 books. I did one on golf, which I'll explain to you in a few seconds, and I write for a lot of business journals, Entrepreneur, Forbes, and a few others. Next slide. So I love credit cards, but I happen to love golf more, even though I'm not so good at it. But I have invested, and I do own a few golf companies, more as an advisor than as a day-to-day operator. But I did buy a company called Click It Golf about 5 years ago, and then we've amassed other golf businesses under our realm. We do have about 1 million golfers in our database, so we send out about 10 million emails a month to golfers, and I just share that with you because if there are ways that I can help with our database for your section, I am more than happy to do so. I've also been very fortunate. I met Jeff Lofstad about 15 years ago, and the section and working with Jackie and the team over there, I've been helping them on their payments for about, 14 or 15 years now. So that's my quick background, and I'm happy to go through any of the golf stuff afterwards as more of a side note. Next slide, Jackie. So here's what's interesting about payment processing is your section accepts credit cards as a form of payment, but we're an unregulated industry. So what happens is you never write a check to Visa and MasterCard. The money, it's called an ACH. The money just gets automatically taken out at the end of the month. And I've worked with about 22,000 merchants throughout my career personally. Our company has worked with about 22,000 companies, and from really big to really small. So our biggest client that I've helped is Delta Airlines, and our smallest is the local merchant doing $1,000 a month. But regardless of the size of the merchant, the payment structure is the same and how it's set up. And I think that the industry has become so confusing to people like, in your world at the executive director, CFO, finance, office manager level, that reading a credit card statement has become beyond confusing. And I still get confused when I read some of these things. So if I can't read them, without sounding presumptuous, you probably can't read them either. And I do have some statements that I'm going to show you towards the end of the presentation, and we'll go through real life examples of how a payment, how a statement should be read. So because we're unregulated, you can go to the next slide. Yeah, next slide, Jackie. Because we're unregulated, if I charge you 5, 6, 7% and you agree to sign that document, it is legal that we can charge these high numbers. And I'll explain what's happened in the industry. It's like a shell game. And this is the ecosystem of payments. So when people say, hey, I'm working with SunTrust or Bank of America or Wells Fargo or First Data, there are so many players that play in our ecosystem. And because there's so many players, there's always these continued markups. So everyone says to me, oh, I'm paying 2%, I'm paying 3%. 2% is very different than 2.06% or different than 2.72%. And the industry now has approximately 600 fee classes that comprise a credit card fee. So people assume it's just like, Visa, MasterCard, Discover, Amex, the big card networks. But then throughout the entire business, and you don't want to learn today, all about the credit card industry, but I want to give you just the facts. So at the end of the day, you feel better armed that you can go back to your bank, your processor, your credit card salesperson, and help ensure that you have the most efficient rates. Because this money does add up, and there have been some studies now for some business types that say besides employees, that credit card fees are becoming one of the 3 most expensive expense items to that business. So I'll just go around this chart really quickly. The issuer is when you issue a credit card, when you go out to play golf and you give your credit card to the golf course, that's called they issued you a credit card. And that's not what I do. I mean, I understand it very well, and I'm happy to go through the issuing side. But what happens is when you give your credit card, and let's say golf is $100, within a split second, it goes through the entire ecosystem of payments to say, hey, Jeff has $100 available on his credit card. And what happens is, at the end of the day, you as the section, all you really care about is that your money appears the following day. But how it appears, it goes through it, and it's an incredible technological, the technology is pretty amazing that within a split second, they can say, hey, Jeff has $100. It goes through what they call these gateways or terminals or computer systems. And then the acquirer, which is in the upper left-hand corner, these are the companies that actually handle the technology to ensure that the money hits your section the following day. And then in the bottom right, these are companies that enable, these are really, an ISO is an independent sales organization, and these are the sales forces and companies that help set you up to accept credit cards. And I'm going to teach you why it's best to get direct to the processor and not add in all these different layers, because when you add in layers, you add in additional expense for you. Next slide. So here's and we can send this presentation to you, so you don't have to take that many notes. But at the end of the day, I said, you're the customer, you go to the golf course. So the golf, or you are the section, and I've worked with Blue Golf, and I've worked with, we probably have half the country we work with right now in terms of the sections, because Jeff was nice enough about 10 years ago, we did a presentation like this, and we did work with many of the sections. But so you are the merchant, and then what happens is, using the technology of the gateway, whether it's Blue Golf or whether you may have heard of a gateway called authorize.net, and there's hundreds of these gateways. It goes through all these different steps, and at the end of the day, the money will appear in your account tomorrow. But what I care about for you today is if I put through $100 to play at a PGA sectional event, do you get $97, $98, $96? Because that money, that $3 or $4 or $2, that's where I'm trying to alleviate and reduce your expenses. It will never go to zero, and I'll explain why. But there are ways that you can definitely monetize yourself and help increase your profitability. Next slide. And I'll just stop there for 1 second. Anyone want to put any question in the chat, or should I keep on going? I'll just take a second. Okay. So here I talked about before, we're both regulated and unregulated. What was happening a couple of years ago, they said that the industry is a race to zero. Everyone's going to start charging, zero. So there's a thing called interchange. Interchange is the fee that Visa and MasterCard have created. So if there's a fee of 2%, the banks or SunTrust, Wells Fargo, et cetera, they're going to mark it up from 2% to 2.5%. And they're going to make, in our world, we call that 50 basis points. So for every $10,000, they would be earning $50. But what's happened is the industry has become so complex that if you were right now to go into your computer and type in Visa interchange or MasterCard interchange, you'll see all these fees come up. And literally about 600 will come up. So what's happened is that credit card salespeople, and this is what I was lobbying for when I was the educational author to the space, we don't have testing to become, a certified credit card, salesperson. Like unlike becoming a PGA pro, a teaching pro, and you go through all your different, I've met, many friends who have gone through the PGA courses. We don't have that. So what we do have is this thing called interchange. And when I'm giving an example of a restaurant. When you go into a golf shop and you go to the restaurant, that's called a swipe transaction. Or I pay my $100 at the golf course. The person behind the counter is taking my credit card and they're going to swipe it through their credit card terminal, their computer. That's a swipe transaction. The other type of transaction, there's only two transaction types in the entire world for credit cards. I know it sounds sort of like, what are you talking about? There's either swipe or non-swipe. That's it. So an internet transaction is a non-swipe. Or if you call into the golf course and, hey, I want to play golf tomorrow, and you give your credit card over the phone, that's a non-swipe. The technical term is called MOTO, M-O-T-O, mail order, telephone order. There's a very difference of rate between the two. Because of actuarial studies, the industry, and this is sort of obvious, that when you have a non-swipe transaction, you're paying a much higher fee than if you have a swipe transaction. It's all because of fraud and risk, which we can go into later. What's happened is that I'll talk to a golf course or a golf section who says, hey, we have the best rates. We're paying 1.5%. But what happens is the account's been set up incorrectly. The account's been set up as a swiped account, but every transaction that's been called in is a key entered account. It's called a penalty fee or a non-qualified transaction. And the rates become incredibly high, like 1% higher. So if you're in at 1.5%, I've seen rates that go to 4.5%. But what happens is, and no disrespect to anyone on the phone, when you look at your credit card statement, it says like 1.5%, 2%. You say, oh my God, I'm in great shape. But all these other fees make the effective rate much, much higher. And again, when I show you the statements, you'll see it. The industry has put in all these different regulations right now. There's fees like what they call PCI fees and regulatory fees and IRS fees and cross-border fees. So the credit card sales industry, again, because we're not regulated, there are so many ways, and I hate to say this, it's almost like legalized stealing. And what's happened now with the virus over the past year, there's been a ton of private equity and venture capital that's entered into the payment space. So I can't just raise your rate from 2% to 3%, but I can send you a statement stuffer that nobody's going to read that says, hey, due to increasing payment fees, DPS ERF will be going up by 0.032% starting, July 1st. It makes no sense to anybody, but now legally they've given you notice that there's a rate increase, and then 4 times a year we're seeing now credit card companies are increasing their fees. And that's what I do at Merchant Advocate. We have a few hundred employees in our company, and we monitor credit card fees for our clients. And we've done about $130 million now in savings for our clients that we can quantify. And our clients range from, again, our biggest client is Delta Airlines. We have about 35 professional sports teams. We probably have 20 of the Fortune 200 clients. And these companies had very competitive fees, but we're able many times to, now it wouldn't be for your section, but we've saved many clients over $1 million a year on their credit card fees, not because they were being taken advantage of on the markup, but they were set up incorrectly. And that's why I see with a lot of merchants of all different industries. And the example I just gave with the restaurant is a pretty good example, that you would think a restaurant is a swiped account, but during COVID, if every transaction was a takeout transaction, they were being penalized on every transaction. Next slide, Jackie. So here are a couple different, and I just put like 10 fees. So again, I'm seeing a message that event. Oh. Hey, Jackie, I just got Greg put into the chat. I'm not sure if everyone's seeing this, that the event will begin momentarily. I don't know if you see that, Jackie, on the chat side.
Yeah, I'm just going to have to exit out of this real quick.
Okay. I hope everyone else is seeing the deck, or can hear me at least. Should I keep on speaking or wait till you're?
Do you still see the PowerPoint?
I see it. I hope everyone else can see it as well.
Yeah, keep on going, Jeff, and I'll
Okay.
reach out to Greg and see what's going
Yeah,
on.
no problem. So what I was referring to is most people say, again, I'm paying 2%, 2.5%, 3%. What comprises a credit card fee, all that matters at the end of the day is your effective rate. Yeah, actually, Dave said the same thing. He cannot get connected. So I'm not sure what's going on. Hopefully we'll figure it out. So within the fee classes, there's, of course, the rate. So the rates are, these 600 fees that you can see on the internet. Then there's different ways to structure a credit card transaction. When I say pricing structure, so you may have heard of Square, which is a very big, Square is Square. I mean, they've been around for 15 years. The guy who invented Twitter, Square. He charges a flat fee. He just says, hey, I'm going to charge everyone 2.8%. And let me see something. So, Greg, are you in now? Can you actually respond? I can. If Greg can hear me, just let me know if you can actually see the PowerPoint. And I see also Carl's having issues. Okay. But if you can hear me, we'll just keep on going. I'll just keep on talking. So there's different ways to structure your credit card fee. It could be, hey, we're going to charge you a 2% for this transaction, 2.5%, 3%. But the most economical way, and this is where I'm happy as just a friend of the PGA of the South Florida section, I can look at this for you. It's called pass-through pricing. It's called, we're going to charge interchange, we're going to pass it through, and then there's going to be a nominal markup, which covers the risk and all the other things that happen on the credit card side. The code. Okay, I'm back in. Okay. So the optimization of data, that is the biggest thing that we do for clients around the world. We will say, hey, I'm having a parent come in to play at a PGA section for their child, and I'm going to pay the $100 to get my child. The optimization means that we're pushing the transaction to the lowest possible fee class, which ensures that you, at the section level, are paying the least amount of credit card fees. Gateways, there's many of them, and there are many agnostic ones from authorized.net. Again, there's different ways, but there are different prices. And with gateways, they can connect to your terminal, they can connect to your computer. But I've seen terminals, they cost around $200 to $300. So we work with a lot of hospitals around the country, probably 250 hospitals. Hospitals could have 500 credit card terminals. We have seen credit card statements that the hospital is paying $50 a month, which sounds like not a lot of money. But if you do it times 500 accounts, and they've done it now for 30 years, because when you lease or rent a terminal, the leasing company does not stop the $50. And we have seen companies that have spent $50,000 that should have spent $1,000 for their credit card machine. Because every month, the way the hospitals work, they get an individual merchant account for $50. So again, not that we don't care about $50, but it's not going to make or break your section. But if you had 500 terminals in your section and you had been spending all this money, you would care. So that's how terminals work. Contracts are interesting. Contracts and terms, many credit card companies will say, hey, you have a 3-year contract and it's going to be a fee of $300, $400 to break the contract, I'm okay with that. But we also see a lot of contracts that say, hey, if you were to cancel before your 3 or 4 years, we're going to calculate the amount of money that we could have made, and that's what we're going to charge you. So we've had merchants that thought they had, a $300 contract, that really had a $20,000 contract cancellation. And it's very, very dangerous. And because I'm not an attorney, but reading these contracts is pretty, I mean, we know what to look for. So we do a lot of RFP. Like we just got it in the sports world, we just got engaged by NASCAR. And we are actually doing the entire RFP process to manage, which NASCAR processor they're going to use going forward. And again, not an attorney, but we know what to look for, and we do share with their attorneys to make sure that the language is in NASCAR's benefit. Reporting, you should be receiving every month a paper statement, but what's happened is most of the credit card companies now, this is not a bad thing, they've switched to online reporting. The problem with online reporting is, we spoke to a CFO last week of a very large company, and actually a very small company. The same thing happened last week. He and a she, so had not looked at their online reports in over a year. If you're not looking, and let's just be honest with ourselves, if you're not looking, how do you know what you're paying? So it's really important whether you use me, use your accounting firm, you learn it yourself. You do need to check these online reports, but because the ACH is happening, and let's say your ACH was $1,000. If it's $975 or $1,020, who cares? I mean, it's in the realm of point, plus or minus a few percentage points, so it's going to go through. If it went to 2,000, I'm sure you'd catch it. But we do see many, many smart companies and smart people that just do not look at this stuff. And this is not just about credit cards. This is about all expense items. We say once a quarter, bring in a consulting firm, do it yourself, and just spend those 2 days. It's not really the most fun work, but just get it done. The reconciliation, again, I think it's more of an accounting function just to reconcile and make sure that your numbers are where they should be. And then RFP, whether you do it every couple of years or don't do it, it's good to get a sense, and that's where we've actually helped a lot of our clients. You don't need to do an RFP because we're not looking to be the processor. We don't want to be their processor in this regard. We just want to make sure that you're being charged properly. Next slide, Jackie. Okay, so I think we're in now. It seems like everyone can see the screen, which is good. Rates and pricing. Because it's like when I go to the get my car fixed, honestly, I do trust the mechanic because he's a friend of mine, and I just hope he's, I'm sure he's telling me the truth. In the credit card space, there are so many ways to be taken advantage of. And I think it's just working with a reputable company and a reputable person because, again, it's like a shell game. So I say in the middle part, how did you meet or who is your salesperson? And this is, again, where I was lobbying in Washington about 8 years ago. And I failed, just so you know, in terms of getting the regulation done. So when you start your section, you've never heard, for the most part, of First Data, Vantiv, WorldPay, Fiserv, all these big technology firms. You've never heard of them. So most people go to their local bank. They go to their local bank, and I know you had to deal with, SunTrust, Wells Fargo, all these different banks. They are not the credit card company. So Bank of America, as large as they are, I think they're the biggest bank in the United States, they use a company called First Data. So they're using all the technology of First Data to put through their transaction. So when I see a bank statement, a true bank, the fees, 99%, are set up either wrong, incredibly high, because they don't understand true credit card processing. They're a bank. They want the depository account. So again, because in the credit card world, you can use a third-party credit card company, but then your money, of course, goes into your bank. Software companies now are getting into the game very aggressively into payments. The challenge I have, and we also own a software company for a payments company that has software. What's happening now is the software company can hold you hostage. They'll say, hey, use our software, but we have our built-in payments, integration. Where I would challenge the software company is, if you're such a great software, have an open API to many credit card companies, because if you want to use Bank of America, SunTrust, this one, that one, why should you be pigeonholed to only one? And what I've seen happen is, over the years, when the software company forces you to use one credit card company, then when they have the rate increases, you have zero leverage, none. So that's where I've also helped as a third party advocate for our clients. We can say that we know the software companies can use many, many processors. But then I say to the software company, be very candid with the PGA. Are you making money on the credit cards? And if you are, at least have full disclosure so that the PGA can make their own decision what they want to do. Going direct to the processor is good and bad. Many processors, so First Data, which is now called Fiserv, they do like the Home Depots of the world, the Walmarts of the world. They can manage these monster relationships. When you're a smaller merchant, like the PGA section or the local restaurant, the local dry cleaner, these monster processors don't really want to do the sales and marketing to the little, and I say little respectfully, because from $1 a month to like $1 million a month is what in our world. And those are still very large companies. Because I have incredible respect I have more respect for the small business owner than I do for the big business owner. And one thing I didn't mention actually at the beginning, I wrote a book about 5 years ago called Size Doesn't Matter, Why Small Business is Big Business, and it became a bestseller on Amazon. So my real affiliation and my real passion is helping the smaller business owner. I think that's where they're being taken advantage of versus the larger companies that have, real financial management systems, et cetera. So the word ISO stands for Independent Sales Organization. And then there's agents who are independent people that are selling credit card processing. And depends how you were set up. It could be from any of these 5 iterations could be how you were initially set up your credit card account. Changing processors. Again, Merchant Advocate is again, we're an auditing firm. We're not a processor. I do have a processing company still. That's what I do with the South Florida PGA. But changing processors is not complicated. The only times it gets complicated is when the software company tries to, they say you can't switch. Everyone can always switch, but some of the processors make it incredibly difficult, and that's through the software. The credit card terminals, which I don't think many of you have as going forward, most people now use the computer, but again, it's not complicated to switch. Next slide. So this is where I talk about optimization, and I use the term all merchant accounts are not equal. And even within your section, it may not be considered all equal, your sections. Because if you're, depending on how you're set up, is it more for tournaments? Is it more for just taking annual fees? Is it more for maybe some philanthropy? There are different ways to set up the merchant account. The reason I put longer there, this is just a little, Jeff always laughs at me, Jeff Lofstad. My neighbor, one of my closest friends, is Longer. We play a lot of golf together, but we actually met playing ping pong. So he's a lot better than me in golf, but in ping pong, he's not. So that's my, for a 2-time Masters champion, I can beat him in ping pong. So next slide. So here's how I talk about how do you process. And again, it could be from the traditional credit card terminal. It could also be like, I've even had Jeff and I've spoken in the past about, like, you go to, he had an event a couple of years ago, he needed some mobile devices, or you can use your cell phone right now. The cell phone has become very powerful to accept payments. And we actually built our own technology. We built our own version of Square to actually make the cell phone do that. But then also the credit card gateways where the computer becomes your terminal is very powerful. And we see now that more and more clients are using the computer, and then you could buy like a little wedge. It's like $30, and you put it on. That's where you could swipe the credit card through. Because again, a swipe transaction is more beneficial for you than a key transaction. However, if you're set up incorrectly, so let's say I'm telling you that a swipe is less expensive, but if your credit card account was set up as a key entered transaction, no matter how many swipes you take, you'll never get that fee. And I know most of your processing is not through swiping, but let me tell you the other way. If your credit card company, this is what I saw with Jeff like 13, 14 years ago, if your credit card company was set up as a swipe transaction, but 90% of its key entered, you're paying a huge penalty fee on every transaction. The account should be switched to be set up as a key entered transaction, And that way, when you take my $100, you're not paying these enormous penalty fees. And so that's where, again, as a favor to the PGA and to all you listening, I'm happy to just do a free cost comparison just to show you. Again, I don't want to be your processor. I just want to show you if you're being overcharged on your fees. Next slide. So EMV is probably not as important to you because that's the chip enabled. So again, I don't, and we could at the end, I'm happy to get your input if you're taking a lot of physical transactions, but that's what EMV stands for. The other thing that's important to know, and this is where the credit card companies make a ton of money, you can't control what credit card I give you. But if I give you a debit card, it's a lot less expensive for you than a credit card. Because with a debit card, the money is coming out automatically from your bank account versus a credit card where you have a month to pay off your money. So it's important that you do explain to your team, hey, like I've had people say to me, I don't want to take Amex. It's just too expensive. Amex has a different rate structure than Visa, MasterCard. It is a little bit more money, but not always more money. But where Amex, I felt, has done an incredible job of its marketing is that when there's what they call a chargeback, and I think I have a slide, actually next slide, Jack, I think it's maybe coming up. The next slide, yeah, is about security. You don't have, when I say you, this is the collective group, I don't think there's a lot of chargebacks going on in your transactions. But when there are chargebacks, I'll give you an example. So we just ordered we have a client that's a furniture store. So the customer ordered a couch. Let's say it's $1,000. They had to put down $500 on the couch. It now comes in, it's defective. They already have your $500. Then the consumer can say, hey, I don't want the couch. I want to return the whole thing. This creates a legal dispute within the consumer, the credit card company, and the merchant. And hopefully you're not dealing with chargebacks too often, but there are ways to create a more secure platform. It's very, very important that you become PCI compliant. There's an annual questionnaire that you should be taking. If you're not taking it, and again, I can show this to you in 2 seconds, you could be being charged from $20 a month to about $120 a month. It's real money. And again, $100 is not going to change your business, but we have many accounts that have multiple locations. So when I have a hospital again with 500 merchant accounts and they're wasting $100 per location, it's a ton of money. The other thing I want to just talk about, just so I can give you some more sort of background, is on prepayments. So my son plays in a lot of these PGA sections here in Florida. We always prepay we pay the $50, $75, and then the event is a few weeks later. Let me give you the example on the cruise industry because it was in the news a lot, and I do consulting for some of the bigger, the biggest cruise lines down here in Florida. The reason they said the cruises could go out of business, let's say a cruise is, $4,000. They want the $2,000 prepayment. What happened with the virus was the consumers wanted all their money back because you couldn't travel. The cruise lines had already spent that money to buy the food, to clean the cruises. They didn't have the money to give it back. If they'd given all this money back, they would have gone bankrupt. So what the cruises did is they said, hey, Jeff, instead of giving you, we can't give you the money back, we're going to give you a credit for another $500. And they sort of had to buy their way to get my loyalty that I would use the cruise eventually, and I had that credit. So anything in the payment world that's a prepayment, there's more fraud and more risk because if something defaults, like camps, like let's say a golf camp, you prepay for your son or daughter to go to golf camp, or but it's 6 months away. Let's say that golf camp goes out of business. You want the money back. Who pays that money back is me, the credit card company. So that's where there's a ton of risk and exposure on fraud and chargebacks. Next slide. This is just, the next one, that's just more PCI stuff. So this is a real credit card statement from about 2 months ago. And so this is a statement that you would get for your business. And so when you look at these words, they mean they probably mean nothing to you. Again, no disrespect, but unless you know what these codes mean, how would you understand what you're actually paying? So in the first one, this merchant said they were supposed to be paying that's a rewards card. So I have my debit card, I have my personal credit card, I then have my rewards card that will go into my American Airlines or my Uber, whatever that reward is, and then you have a corporate card and an international card. That's sort of all. There's only 4 main card types that you as a consumer can have. When we looked at this statement, we saw that the credit card company was surcharging $53 above what they had indicated on their credit card application. And where it says like here, like $29,000 hit EIRF, EIRF, there was a simple fix how to get that EIRF down significantly, but because the credit card account was set up incorrectly, they were being surcharged all this money. What really got me on this one, that's why I put this slide in here, they were supposed to get a credit. It was like $141 plus $33. It ended up being a debit. So we called up the credit card company and said, hey, we're representing the PGA, just making the example, and we see here, they said, oh my God, you're so right, there was a mistake. I don't believe mistakes happen that easily. This is too much money. So we tried to start a class action lawsuit against this processor. We didn't get it done because we said, hey, I think they have been changing the code from credit to debit on not just my merchants, but a lot of merchants. And then the one that was beyond, I couldn't believe it. So what we do is we have a combination of artificial intelligence, machine learning, and human beings. We've got about 50 analysts that work for us. So we call up the processor, and we do this on a monthly basis and said, hey, processor, what's this charge of $92 on this transaction of $7,950? They couldn't figure it out. They literally couldn't figure it out. And it was a made-up fee, which is really disgusting. And we get the money back for the merchant. Jackie, next slide. So what we do is we look at these statements, we fix them. So we say to the processor, hey, Jackie loves working with you. No one's changing anything, but we see these BS fees and we want to fix it. But here's why someone has to look at this stuff more than just once every couple of years. These are real statements. This credit card processor lowered the fees, which we had asked them to do because we knew we were right, only again 3 months later to raise the fees again. And this happens, unfortunately, every single month we see this for we have thousands and thousands of clients, and we see this going on. And this is why I say I really believe there's like legalized stealing in the payment space. And that's why, you may have heard of Stripe and Square and Venmo and Zelle and PayPal, all these different companies besides the traditional processors are playing in this industry. And that's why there's so much money, and it's all recurring money. Unlike taking a golf lesson where the teacher may charge, $50 or $100, that's a transaction. In the credit card space, once you set up the merchant account, every single month this is going through, and the computers take over. Like, when was the last time a person called you from your credit card company? The answer is probably never. Unless you're changing your bank account, or maybe you saw a chargeback. Not just me, the industry has said, hey, the level of customer service is absolutely horrible. The other thing that's happening now in the payment space, which I don't have a slide for this, but I think it's important. About 4 or 5 years ago, the industry, and I spoke to Jeff about this as well, I could wipe out all your credit card fees. You'll make them zero. So you say, oh my God, how do you do that? The industry now has allowing, you are the merchant, the PGA is the merchant. You can now legally pass on the credit card fee to the consumer. Let me take an example of like a bagel store, because it was meant initially for quick service food and items under $25. I go buy bagels for $10. Assuming a 3% fee, the bagel store will get $9.70 in their account tomorrow. and we have a company called Zero Fees, which what happens now is there's full disclosure, but the PGA can say, hey, when you sign up to play in a tournament, we're going to be charging, it's almost like a surcharge. We're going to have to charge you 3% for the privilege to pay with credit card. If you pay with cash or check, you still pay your $50. But I just want to tell you, I believe in the next 5 to 10 years, this will become the norm in payments. Just like when you go to a resort and they charge you a $20 resort fee, or you go to the ATM and it's not yours, and they charge you $3. It's all BS. It's not costing them $20 to have your internet work. So I believe that as you continue to grow your section, there are ways, and this part of our business has exploded because not me, the industry has said the local consumer wants to help the local merchant. And that's where, with full disclosure, you can pass on that 3%. So, and there are ways you could pass on 1.5%. So if credit card fees are becoming a very significant line item and hurting your business, there are ways that you can alleviate them. Next slide, Jackie. So here, this is like just a little, 1-second sales pitch. Just that, we're not the processor. We are here just to help you. And the way we monetize ourselves, being very candid, is that if we save a section money, we take a percentage of that. That's how we make our money. And on the processing side, there's no revenue share. It's just like, hey, we work on a very, very low split, a very low surcharge. I would say probably when I helped Jeff in the section, this is probably, again, 13, 14 years ago, it was probably a 40% savings that we helped him with. But those are the two differences. So I still have a credit card company, but what I wanted to talk about here was just how to, be more of an educational, platform for you, just to make sure that you're being charged correctly. And next slide. And I think we're done. So if you want to put some questions into the chat, and again, I'm more than happy, zero, no obligation. I'm happy just to do a free, just look for you and just tell you within a couple of days if I think you're being, if you're in good shape. In about 7% of the cases around the country, we do say to the potential customer, hey, you're in great shape, there's nothing for you to do. But in 93%, we say there's a significant opportunity that you can be saving some real money without changing anything. So hopefully that was helpful. And one other thing, I'll just if you have any questions, you can pop them in there. You can always call me, or we'll send you the PowerPoint. The other thing that you should think about is the funding times. A lot of processors will hold your money for 2, 3, 4 days, and they make the float on the money. It's very important you have your money the next day. But I didn't mention that during the presentation. Jack, anything that came up, or I'm not sure if I'm seeing all the, any questions coming in.
I do not see any at the moment.
Well, if you want to share, to the people attending, if you want to share my contact information, they can always, or I'll just tell you, actually, my cell phone is 201-245-4545. And my email is J for Jeff Shavitz, SHAVITZ, @merchantadvocate.com. And if you want to just, shoot me an email or text me, whatever's easier for you.
And Jeff, we'll send your information out in the recap email, as well as the recording of this presentation, for those who want to watch it again or want to reach out for any questions for you.
Perfect. Well,
all right.
Thank you so much. I appreciate it.
Thank you, Jeff, so much. We appreciate it.
My pleasure. Have a great day. Thank you. Bye.